The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 6th, terrific Thursday edition of today's Trader's Edge show. I'm your Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, well, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the buyers and the sellers, what the bulls and the bears are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone, dial on in. Now's not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Of course, you can email me, steve@tfnn.com, inside the den. Ping away. Happy to take any and all requests. See if I can assist you. Let's go ahead and get this wonderful show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading down about 18 points. She's trading out at 18,262. S&P is flat, up a point actually, trading out at 2161. NASDAQ Composite off 7. Russell 2000 down 2. DAX closed down 17 points. FTSE down 39. Gold is off $13. Silver's down 34 cents. Light sweet crude is up 52 pennies, trading at 50.35. Leading the charge here to the upside, ICU Medical. That's up 17.5%. Coupa Software Inc., COUP, is a ticker symbol. Well, maybe that's an IPO. Must be an IPO or a buyout. It's up 93%. A quick click there, and that would tell me. Yep. IPO. NetEase, that's up $7. Alta Salon up $6. Watts Co. Up $4.60. Google's up $4. Apple's up $1. You've got to the downside, Alnylam Pharmaceuticals getting annihilated today, down 47% with volume. Looks like that's headed lower. Tesla, that's off about 3.5% or $7. You've got Twitter down $5. Wave Life Sciences off $4. So a number of things that we can go ahead and take a look at. But first is with regard to the market. And just to update you, you had called it again yesterday. You guys are amazing, just absolutely amazing. You said, hey, wait till you get to that seventh wave session, letter G, in the ES Mini before you consider taking before the market would reverse course, which is exactly what it did. It's extraordinary the work that you do out there. If we take a look at that seventh wave, that came in at 3:30 yesterday, and a nice big old bearish engulfing candle at the same time. That went ahead and moved markets lower, somewhat lower overnight, just slightly. Then as the market, and it looked like, I'll go ahead and get it out here. First, what the market did after it formed that wave G, it formed a nice little A to B equals CD to the downside. It did that right here, created a nice little doji at 6:30. By 7 o'clock, a nice little reversal signal. We saw a bounce right up almost to the 2154 level. That was the price point that I suggested to subscribers as a newsletter went out. Look for a price to get up there. It got up to 2152.75, I believe, was the number, if I am not mistaken. And I'm often mistaken, but let me just see. What did it actually get up to? 2151.75. Okay, so not that mistaken. Before we went ahead and saw a Nike swoosh to the downside, right? We saw one more push to the downside, and then there was a nice little hammer candle that formed. Now we're trading right now at 2153.50. So our 2154 number continues to get banged and banged and banged away. but continues to hold as resistance out there. So a significant area of resistance. Now, you and I have taken a look at the 2155 level, just as strong as a resistance area. We came across that by just knowing where our horizontal trading range boundary lines are. These are the horizontal ones. We can see 2155 since September the 8th. We've seen candle closes there on a 30-minute basis 38 times. And the next level is where there's support, which is 2138 and change out there. There's been 21 closes there. So this 2155, a significant level of resistance. Now, if the ES mini is going to be able to get above that area, and I don't think that it will. I think it's really just stuck here in a trading range. It's really waiting for the NQ to do its work out there, which is still to make a higher high. It will likely do it in the face of the ES mini or the S&P not really budging too much. But if, in fact, I'm wrong about that, which is fine. All we can do is identify these levels, understand where the battle, how much easier is the market when you understand where the battle lines are? So much easier. That's what I'll be sharing with folks a couple of weeks from yesterday, which you can also, and I'd like you to join me, because you can join me for that workshop as well as the 3 other workshops. You take just those 4 workshops, and you will be able to, you'll just simply compress decades into hours out there with regard to your educational experience, technical trading-wise, that is. Now, if price were to move above 2155 in the ES for any reason, we'd be looking at 2171 to really be its target. Now, 2163 could be an area of resistance for sure, but I'd be looking for 2171. Nonetheless, that's not where we're at right now. Should the market start to move lower? Well, it's up against resistance. That's one thing that we know out here. And now, are there any other patterns other than just really a retracement and running into resistance? The answer is no. Wave count wise, there's nothing out here that says that this should be resistance other than 2 very powerful, and I do mean very powerful, levels of resistance. So I don't anticipate this area being taken out. Now, all of the other 30-minute contracts were also doing the same thing. So the NQ, now the NQ had a stronger, no, it didn't even have a stronger bounce. What the Sam heck am I talking about? But a nice little hammer candle that it formed out here at the completion of its A to B equals CD pattern, followed up by a nice bullish engulfing candle. As far as resistance zones for the NQ, I don't have those really identified here. If I were going to give you a number to take a look at, it would just simply be 48.72. We're trading at 48.71 as we speak right now. So you can see we've got, in essence, all of our markets sitting right here at resistance. What is going to be the next move? At this stage here, what would I like to see, and what is it going to be? 2 different things. I'd love to see the market move higher. I want to see that NQ on that wall. And that means just get above the high from, I think it was September 7th, 8th, 9th, something like that. Just a tick. Just a tick above it. That would make me feel more comfortable with regard to what the market might do. Now the truth is, it's likely not to take place today, October 6th. Tomorrow's October 7th. Likely not to take place next on October 7th, to frustrate both the bulls and the bears. But next week, hey, whole different story out there with regard to that level being hit. So, with regard to the market, are things bullish? Are things bearish? Actually depends on where you look. Dow Jones Industrials, as we speak right now, which has been the weak dog out here, so far today, hey, actually got a hammer candle. But nonetheless, the real number to be paying attention to is 18,230. Closing above that is at least short-term bullish for the Dow. That's the weak link. See Rhodes with TFNN. We'll be right back.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long, short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I will take your phone calls. Love to take your phone calls. Let me see here, checking in on the email screen, see if there's anything out there. And none that I see. I could have overlooked something, and if I did, my apologies. So we took a look at the markets. Not really a whole heck of a lot to really cover there. I mean, if you have a specific question about an indice or something, give me a ring, and we'll take a look at that. But I don't see any reason to spend a whole heck of a lot of time on those. Again, the premises here, these are really intraday trading markets as we speak right now. Wonderful patterns, and until they start to fail, that's the way that it will stay. You can easily anticipate this staying this way here for the next 6 or 7 days, which will frustrate those that are trying to take some intermediate or short or swing type trades out here, because you got to be swinging from the trees here, and so just be careful. Just make sure you've got stops in place. Don't let me, tell you what to do out here. All I'm doing is just taking a look at the charts and telling you what the charts are communicating to us. And it's always so important. It's always so important to first recognize what type of market that you're in, because then you should really have a trading plan and programs if you're going to be an active trader for those market conditions. You get a market that's trending, it's a whole different story, right? You get a market that is making these intraday moves out here one day where you'd think that the bulls are going to celebrate, and then 2 days later it looks like the bears are going to celebrate. It's communicating a whole heck of a lot to us with regard to what and how and why you should be trading. So with regard to things that are moving, that are trending, what is trending in the marketplace? What is trending on Twitter? Geez, how weird is that to even say? But if we take a look at what's trending in the market, certainly light sweet crude has got a trend going on. It's got its mojo working. Right now, today, we'll see what the close is going to be like, but the sucker is breaking out. It is breaking out above resistance. Resistance being both the daily and the weekly TAS market profile. That was the $50 level. Again, inside the den last week, as Light Sweet Crude was breaking above that trend line, it was very easy to say the next move was going to be 48.53. The next move after that was going to be 50, and the next move after that, we were going to see price go ahead and tag the 53 area. Well, 53 is where it's at as long as we see it close today above 50. There were others that said differently, and that's why we have two sides of the trade out here. All I'm doing is communicating to you the information that you and I use each and every day, whether it's a trend line, just as Confetti Wars was posting something with regard to the U.S. dollar index, an excellent tool. Take a look at those trend lines, and the U.S. dollar index absolutely was right up against a trend line number, so it could be up against resistance, and is up against. Not could be, it was up against resistance. The idea is that we take a look at when those levels fail, or there's a breakout above it, where is price going to head to next? Well, in this case here, we can see that you're headed back in that $53 area. Now, what we have today is actually a small A to B equals CD to the upside. Really not so small in the case of Light Sweet Crude. If we take a look at it, our A point is using this August 3rd low. The B is out here on August 19th. See if I can get to it. There we go. And the retracement took place there on September 20th. So here we've got a 1-to-1 A to B equals CD. You're passing your B point with volume, or my assumption is that you are, because if I just simply go over to the USO ETF out here, we'll see the swing point being 31 million shares on August 19th, and you're at 31 million shares basically now. So you've got a confirmed, and this is why the USO here, their profile's totally different than taking a look at the actual current contract. That's why when you're trading those ETFs and the underlying instrument are, current contract, like when you're trading the VIX ETFs or ETNs out there, even worse, and what you believe you're actually trading is a VIX index. Nothing could actually be further from the truth. You're really not. You're trading what is the underlying instruments within them, which is about usually like 60 to 70% of the front month contract for the futures contract for the VIX, and then the other 30 to 40% is the next month's contract out there, which could totally two different things, totally two different price levels. You might say, well, what do I mean? Well, I'll show you what I mean, but after we go back and take a look at this Light Sweet Crude out here. So you've got a confirmed A to B equals CD to the upside in the case of Light Sweet Crude, so long as it closes about 50 today, and that says 52.29 to 54.80. So it takes you right back to the swing point out here. Now, is this going to, the June 9th swing point, going to contain price? Is that going to be the end of it? I don't know. We'll see what type of volume is occurring as price gets up to that level. But that is where the target is, 52.01 to 53.39 out there. With regard to the VIX, as I just mentioned that earlier, if we take a look at it, the actual UVXY as an example, or XIV, or SVXY, or TVIX, or VXX, basically the most horrible trading vehicles on this planet, with the exception of trading them intraday. But for the most part, there are times when you can catch something for a few days out here. But for the most part, you're going to catch pneumonia if you trade those things. From the standpoint of, folks have sent me email after email after email saying, hey, with the VIX being so low, shouldn't we just buy this and put this in our portfolio and hold it? And then I always send them this chart, basically. Let me do this here, and I'll put it on monthly, because here is that vehicle, the UVXY. And I would say, well, just ask the guy who thought the same thing when this was priced at, let me see if I can get this right here, $2,375,511 per share. He thought that this would be a good long-term holding. Right now it's trading, by the way, at $15.91. Now, look, folks, it never was priced at $2.3 million. But if you do the reverse splits enough, that's exactly what you get when you take a look at this vehicle. So is UVXY a good long-term holding? Not in any scenario. I like saying that word, scenario, that exists out here. Day trading vehicle, or a couple of days out here, yeah, you can catch a big move. But so here's the when you trade those vehicles, UVX. I don't know what the percentage makeup is, but you've got the current contract being the October contract. That's probably 60-75% of your weighting. That's trading at 15.16. Cash fix index, by the way, trading at 13.18. And then you've got the following contract. So you've got November. That's trading out at 16.59 out here. So that's why when you take a look at daily movements in the VIX cash indice versus that ETF or ETN that you trade, you don't see a correlations out there. So I see we've got a caller on the line, Chris from Wisconsin. Is that true? Wisconsin?
Yes, it is.
Hey, what part of Wisconsin are you from, Chris?
West of Milwaukee, a little ways.
Nice. Are you a native of that area?
Since 12 years old, sure.
Okay, great. What a cool area. I lived in Milwaukee, Whitefish Bay for about 8 months. Coldest winter I ever spent. Do they still? There was a Brown Deer Park. They used to have a toboggan run out there. Does that still? Do you know? Does that still exist?
I believe it does. It was iced up. It had an ice track.
Yeah, iced up with an ice track. I remember when they closed it down because it was too cold out there. Yeah, I'm like, how can that be? But I do remember that. Hey, would you be kind enough to hold on through this break here, and then you and I will go take a look at the TLT?
Thank you.
All righty. We'll be back with Chris from Wisconsin. We'll go take a look at the TLT ETF. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're on the line with Chris in Wisconsin. We're going to go take a look at the TLT, which is an ETF that holds all U.S. Treasuries. Chris, did you know? So the makeup of the TLT, there's 33, in essence, holdings within inside it, where the bonds are maturing anywhere between 2016, October, as a matter of fact, and all the way out to 2046. Did you know that the bonds went out to 2046?
No, I didn't. I knew it was. I thought it had 20 years. Yeah. I thought it had 20 years, but I didn't know that it was a progressive.
Yeah, it is. In fact, there are $3 billion worth of holdings in it that don't mature. They mature between 2044 and 2046. But so in this case here, in trying to take a look at the underlying instruments, you know, I'll typically throw up the 30-year Treasury just as an average to try to get a guide as to correlations out here. You know, but in essence, those are the holdings within inside it. So that was basically a fun fact. But let's try to get to your specific question. How can I help you?
Well, on this date chart that you're looking at, do you see that as an ABC to the down, and or you see us coming into resistance right here and possibly a pivot?
Well, so let's go with your latter question first, because that could also help us to answer your A to B equals CD to the downside. And what Chris is looking at, folks, is the trading day of September 15th. And on that trading day, and that's our swing point low, that had 10 million shares. Now, the TLT is testing that level today with about half the volume. And so it does look like you're coming in there with some light volume, so to speak. So if we're going to ignore what the actual 30-year bond chart was telling us, then the answer I would give you to your first question is it doesn't look like it has the volume necessarily to blow out that September 16th level to go ahead and are you still there?
You bet.
Okay, good. That's something that reset on my system. So it doesn't look like it's going to have the volume to create that A to B equals CD to the downside. You're specifically looking at that September 15th date as your B point?
Correct.
Yeah. So now, not that it can't, not that volume won't pick up. Now, that's if I were just looking at the TLT and answering your questions that way. If I come here and look at just simply the 30-year Treasury, then my answer to you would be, I think that TLT will take out that swing point. So that's just looking at just the 30-year Treasury and understanding that it wants lower price. Now, when I say it wants lower price, we can see that this is trading in a real nice descending price channel out here. And the level that once it got below, let me get my cross here, once it got below this red line out here, which was 166.65, that indicated to you is indicated that this bottom panel on my chart, which is the price oscillator. Now, price oscillator is a difference between two exponential moving averages. The ones that I like to use are 19 and 39. And there's reasons behind that.
Are you on the 30?
I'm on the 30-year. So I'm on the 30-year for the December contract.
It doesn't show on the screen.
That's the one that I'm showing on the screen.
I'm still looking at the 20-year TLT on your screen.
Really? Oh, you know what? Okay, it did shut down. Okay, that's when I said, "Are you still there?" Okay, it kicked me off of the den. So thank you for saying that. Let me go ahead here, and Steve, if you're listening to us inside the control room, please go ahead and repost this here. Let me get. Oh shoot! Did I do that? Did I really do that? No. No. Now I really did that, which means I lost that chart, and I'm trying to figure out where the heck did I put that. I don't have to redo that. Oh, be a son of a gun. Okay, so now I do have to redo that. Okay, and we got 4 minutes. So we've got 4 minutes for me to do my work here. So just give me a moment if you would be so kind. And I'm going to go ahead and create another version of that chart since I seem to have lost that. That's the problem. I can't walk and chew gum or chart at the same time. But that's okay. I can recover from this relatively quick. If you just give me let's try this here. This ought to work. And okay, so that's nice. I put up the 120-minute chart, which also is bearish right now. But I'm going to go ahead and put up the daily chart for us. Now, what I was talking about to you, and I might have to add this in there because that's probably not in there. What I was really trying to refer to is we were talking about the price oscillator, and not to waste your time. See how are you seeing my chart now? White background.
Yeah. No, you
okay.
just.
Okay, so the price, when price got below that red line, which was on the trading session here of October the 4th, told us that price oscillator that I was showing, the difference between two exponential moving averages, had turned down. Now, when a price oscillator turns down and it's below zero, and this was below zero, it's a very bearish pattern out here. So what that communicates to you and I right now, the information is that price ought to get down and test the bottom of this channel line out here. Now, it might break through there, and if it breaks through there, no big deal. But it at least communicates to you and I that this ought to go lower. And if this is going to go lower, volume or not, with regard to your TLT, it too should go lower out here. So that's how I would put that all together.
Okay.
Are you short or are you long TLT?
Well, I was short TLT till this morning, and I got out because I saw what was looking at the volume, and it just didn't look that exciting right now.
And that is an excellent call. That is the absolute correct call in making your decision about TLT and only looking at the TLT ETF versus, let's say, looking at the 30-year Treasury. So
Sure.
That makes all the sense in the world to me. But to the extent, if I try to put this chart up here, somewhat side by side, you're not going to see really an exact movement here. Somewhat of but you're not going to see the exact movement out here. So there's nothing wrong with your call.
So if TLT showed a bounce here today coming into the close and yet still low volume, that might be a favorable reentry place?
Yeah, so on the TLT, if you and I just use only the TLT ETF to make that decision, your bounce, you would be looking for about 136.17 to hold as resistance. And then if it does, and I would say, now, what I can do for you is let me just do this. Instead of the 30-year Treasury, let me just put the TLT up on the screen here. I don't know why I didn't think about doing that. Let me show you its price oscillator. Let me go ahead and add that in for us so we can just take a look at that. Let me get rid of one other thing out here just to clean up what it's going to do. Remove that, and then okay. So now we're just going to see, well, we were going to see it. So what's its message? Here, when we take a look at that oscillator unchanged line, that says about 135.90 is a level that if you saw a bounce to and it held as resistance, and that would be a place where you would go ahead and jump back in on the short side. If you saw price move above that level, then you're looking at a larger bounce that would unfold. So you really want that 130. Today, the number is 135.90 in essence to hold as resistance on any bounce. All right, my friend?
Thank you.
You bet. And thanks so much for calling. Have a great day. That was Chris in one of the cleanest states on the planet, Wisconsin. It's also one of the coolest. And I do mean cool by cold when you close down a toboggan run because it's too cold outside. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 22 points, and one of the questions inside the Tiger's Den, thanks for posting it as well, and I hope I didn't overlook any others that might be in here, comes from Duffy, and he was asking the question of if we expect a bounce inside the GDX here. So as we take a look at it, in order to answer that question, we really have to take a look at a couple of different things, right? You and I need to take a look at the GDX specifically, or the XAU. We could go to the indice out here, but we're going to use the GDX. And we are going to go take a look at gold and silver. And we can look at some things on some different time frames. That's the only way that I can answer that question. And it was an excellent question, by the way, that Duffy asked, and I presume part of the reason is, well, we have a number of different patterns that you and I can take a look at. On this chart here, we can see that inside of the GDX, as nice of a flush out as we have had inside of the mining metals themselves, we can also see that inside the miners themselves, we are now seeing price moving lower with less relative energy. Now, that does not mean that that is a time to buy just yet. Now, that's specifically with regard to the GDX. Obviously, if the GDX is doing this, then it could only be doing it because one of the, I don't know how many equities are in the GDX, 30 to 40, something like that. It must mean that some of those that also have the same pattern out here. If we were to see a bullish reversal signal, then Fletch, then the answer was no, it wasn't Fletch. It was Duffy. Then the answer would be yeah. You would absolutely expect a bounce or a bottom. So you gave the question expect a bounce. I would say it could be more than just a bounce out here. But we don't have that yet. But what we do know is with regard to the rubber band inside the miners, they're pushing lower with less energy. And anytime anything's pushed lower or higher with less energy, that's where you and I, the hair on the back of your neck or the front of your chinny chin chin should stand out. You should be having those on your watch list in a pretty significant way. Okay, so we know that is what's going on out there. And it was the very first thing that I noticed yesterday and is posted in my newsletter charts when I took a look at the XAU. I was like, aha. very interesting. Schultz didn't say that, but at Hogan's Heroes, maybe it was Colonel Klink that said that. So that says, let's go take a look at gold. Let's kind of step back and we take a look at gold out here. Now, on the GDX, let me do this too. That pattern, the other reason for us to look at that pattern is we're getting very close to at least a 1-to-1 A to B equals CD to the downside. So 2208 is that number. Now, if you get to 2208, does it mean that that's where price needs to stop? And the answer is no, of course not. It could go down to 1981, which is the 0.618 retracement level. But we know we're starting to get down to those areas where it makes sense to look at. Okay, now let's go back to gold. Let's do this here with regard to gold. This is not going to show us a whole heck of a lot, I don't think. On the daily, well, this is going to show us. It's going to show us a heck of a lot. You got gold's off $14 right now, and so could be a false signal, Duff, that you and I are taking a look at out here, because I can easily make the case that where gold is headed to is 1190-ish. Nothing more than a measured move of this little wedge pattern that it broke through and get you back into the May 31st type level out here. Get you into the breakout area from the trading day of. I don't know what's going on with my system. Maybe it's hurricane-oriented. Some in early February. It looks like maybe February 15th, wherever that breakout day was. I can't get my cursor over there. So until the bulls arrive, and they can't hide. They cannot hide from you and I. That are you going to buy the bottom tick? No, absolutely, positively not. But are you going to get crushed because you came in too early? Most likely not. That's why we wait for the cavalry to arrive. Now, with regard to gold, because it shows us that potential move lower out here, and the miners are not likely to find a bottom or move to the upside with gold moving to the downside and silver moving to the downside. That's why we've got to try to put this thing together. Now, as we take a look at a 5-hour chart here for Goldilocks, what we're going to see is that, up until about 9 o'clock this morning, gold had been moving lower with less relative energy. See that? See how it's moving lower out here? Let me just make sure that this is turned on properly, because sometimes I have this set for it not. Nope, it's set properly. So it says that this last move that we had, and when I said move, I was speaking like a cow. This last move that we had out here actually negated that whole pattern, right? So the mere fact that things move higher or lower, do it with less relative energy, that is not a signal. I can tell you that J. Wells Wilder did not teach that. He did not teach that pattern out there. He also did not teach the oscillator on change line out there. And this came from, literally thousands and thousands, and I do mean thousands of hours, 10,000 plus hours of work in order to be able to identify and answer that question. Why didn't that work? Now, this doesn't work all the time, but it works a whole heck of a lot more than just saying, hey, something's going to get to X and it's going to turn out here. Wait for the cavalry. And if what I'm communicating sounds like hogwash, I can turn all that hogwash into an extraordinary trading plan and education for you. Just go over to the homepage at TFNN.com, sign up for my workshop, $49, and you're going to get all these workshops on your members page, right the moment after you sign up. So here's what we know. Coming off of this high out here on the trading session of about 9 o'clock in the morning on September 30th out here, from that high, we're now down in wave number 6 out of 7. That says we really can't see a G here for, about 10 hours or so. Not really 10. I'm not going to go do the math on it, but it might be coming. So the 5-hour chart inside of gold could be singing in the key of G. I wish that it was moving lower with less relative energy. That would be a beautiful thing, but it's not. Let's take a look at the 2-hour chart. What's going on the 2-hour chart out here? Well, the 2-hour chart, it is. What is it? Price has been moving lower, doing less relative energy out here. And on this bar that we're in right now, we're going to get, when this bar closes, this 2-hour chart closes. I'm going to tell you when that is. I think it is at 2 o'clock, but let's make sure. It's at 2 o'clock when this bar closes. We're going to get a TD setup 9 count out there. We're getting number 9. Now, number 9s are typically where price will stall. Uses a lot of energy to get there. Stalls are bottoms. Take a look at the last time that we got a 9 count out here. This was at 2 o'clock in the afternoon. This was on October the 5th, a couple of days ago. Price stalled, right? Just stalled. So what should you anticipate? Over the course of the next several hours or so, price will probably stall again out here. But, when you start to see things move lower, doing less relative energy, it's worth taking note. Now, there was a hammer candle out here that failed. This should have been the bounceable area right here at about 2 o'clock in the afternoon yesterday. Nice little hammer candle that failed. As soon as price got below that, you know what it said. Don't be long. Intraday for sure, don't be long because price was going to go ahead and go lower. If I now take a look at a 30-minute chart, and sorry to be long-winded about this, but I don't know any other way to do this, not meaning the long-winded part. I don't know how you could really answer the question or Duffy's question with regard to the GDX unless you really took a look at what was going on in the metals marketplace. And I am more comfortable trying to find an intraday reversal and taking a look at gold and silver specifically versus the GDX than looking at that chart intraday. Plus, I got so much more information. The GDX, I only have how many hours of information? 6.5 hours of information really to use versus 23 plus. I'll use the 23 plus any day of the week out here. So the answer is, looks like it, Duff, but we're just not there on any of the time frame charts that I look at. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We got two questions that came in during the break by email. So one for Michael. Let's go take a look at this. This is on Tesla. He's got some puts on Tesla. And if we take a look at this, the question is, where is this headed to? We can see a gap down today. Volume so far behind the move, about 3.6 million shares. Last time that Tesla was pushing down in this area was on September 13th, about 3.5 million shares. So looks to me like you've got the volume to head down that way. Now, there is some support out here today. Here's the level of support that you want. Let me just refresh my screen and make sure that is accurate and correct. Yeah. So you've got a brand new TAS market profile that formed today. So what you're looking for on your puts that expire tomorrow, you're looking for Tesla to close below 201.16 out here. That happens to be the current TAS daily profile out here. This profile is pretty much equally distributed. The point of control is about in the middle of its box out here, so it's not providing you or I with a whole lot of information out here. The question was, will this head to 185? I don't think it'll head to 185 by tomorrow, if that's your question. And at that 185-ish area, you've got to contend with this high volume, high-ish type volume type. By tomorrow, the answer is no. Do I see Tesla going lower? Look, just the stock chart itself says it's going to go lower, meaning it's been in a descending price channel ever since it's made a high out here on the trading day of April the 7th. But tomorrow, no, I don't necessarily see that. You're up against some support, pretty decent volume behind the move. Over the longer haul, it looks to me like Tesla has rejected the top of that descending price channel and no reason for it to not go visit the bottom of that descending price channel. So I hope that helps you out. Then Ken was asking if we would take a look at U.S. Steel. I believe that's what your email had said. I hope that I've got the right symbol for you. With regard to where is this headed to, as we take a look at it, right now today it's trading at $18.14 out here. The first question, I'm doing this on a different chart. Now I'll go ahead and pull this over. I have multiple charts going so that because I don't have all my tools on one charting platform. It would be nice if I did, but I don't. But here's what we know about U.S. Steel. From its high out here, Ken, on August the 1st, down to a low that formed on September 19th, if Stevie Wonder, not this Stevie, but if the other Stevie Wonder who sings in the key of G, he's got to be asking for a royalty out there, you can see that that's actually when the bottom came in. That was on September 19th. So really nice move for a bottom. You also happen to have a TD setup 9-count that took place out there a couple days earlier on September the 15th. That set up your nice little bottom. Now here's the problem. And take a look at this. And from there you had 9 successive counts right from that low out there that gave that little bear sash candle out here on September 29th. Not necessarily so good because that can be the mark of a short-term top. Well, guess what? That's what it turned out to do, form a short-term top. Now, today is a beautiful thing. And if you're long this, which I think was what your email was suggesting, you want to see it close today above 1788. That'll actually go ahead and turn the price oscillator up. That is the bottom portion of my screen out there. Here's the problem. It's going to turn up. It's still below zero. You really want to see that thing get above zero, which means if, in fact, the price oscillator turns up today, if, in fact, price is able to get above 1839, it doesn't have to be today, but it would be nice if it did. That'd be back inside the TAS market profile. Then what you want to watch is what kind of volume do you have at September 28th, September 29th that had let's use the 23 million shares, because if U.S. Steel can get above that, you've got a small A to B equals CD to the upside. And if it doesn't, for goodness sakes, you could actually have an A to B equals CD to the downside out there. So looks okay. Hey, folks, this is the end of the show. God willing, I will be with you tomorrow. But based on this hurricane track, and I doubt I'll have internet. But hopeful I'll be here. If not, I'm sure they'll have something lined up for you. Have a great Thursday, folks. We'll see you tomorrow or Monday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.